Hey, I'm Chad from Blockchain Bulls, and this is Trend Types and Phases. In this module, you'll learn DAO theory on trends, the three trends of market movement, the three phases of a primary trend, and the characteristics of an uptrend and a downtrend. DAO theory is one of the foundational principles of technical analysis in financial markets. It was developed by Charles H. Dow, who is the creator of the Dow Jones Industrial Average. Dow recognised the market moves in trends and cycles much like the overall economy. Before we trade or invest, we want to know the overall direction of the market. Dow theory is based on a series of principles and observations about market behaviour. It provides a framework for understanding and analysing price movements in the markets. The famous Dow theory says there are three trends to market movement. 1. Primary trend. 2. Secondary trend. And 3. Minor trend. The primary trend is the most important of the three trends and is the overall market direction. Determining the overall market direction is imperative. This is an example of a primary uptrend. From the period of April 2020 to November 2021, the Google share price was in a non-stop primary uptrend.
Hey, it's Chad. Screenshot and scan this to join our free Alpha Telegram chat channel. See you there.
Dow theory identifies primary trends as the major, long-term movements in the market. It is the granddaddy of the three trends and would dictate the high probability investments and trades. These trends can last for several months to several years and typically define the current bull or bear market. Bull markets, uptrends. In a bull market, the primary trend is upward and prices generally rise over an extended period. This is characterized by higher highs and higher lows in price. Bear markets, downtrends. In a bear market, the primary trend is downward and prices generally decline over an extended period. This is characterized by lower highs and lower lows in price. The Dow theory teaches that once a primary trend is in place, it continues until something forces it to change. This is due to the momentum that a trend carries. This powerful momentum can take your trade to massive and unexpected highs. It's much like Newton's law. An object moves at a constant velocity unless acted upon by a force. Examples of that force may be a recession after a long uptrend or a negative news failure after a long downtrend. Dow recognise there are three phases to every primary trend. 1. The accumulation phase. This is the first phase of the trend. This is the start of the trend, and this is when the patient money like to enter their positions. 2. The public participation phase. On average, this public trending phase only occurs for 30% of the time, so we must take advantage of it while it is on. 3. The distribution phase. And the last phase of the trend is the distribution phase. This is where people that bought in during the other two phases sell to the people that think the trend will continue. And as you can see, this is where the trend can reverse and end. And this is them all together.
Hey, it's Chad. Screenshot and scan this to join our free Alpha Telegram chat channel. See you there.
Of course, the accumulation phase is the best time to enter in a long trade or investment, but this requires high skill, top information, or good luck. Entering in the accumulation zone, however, unless your timing is impeccable or vast, you may find yourself waiting for something that could or could not eventuate. After determining the primary trend and that it is advancing with public participation, waiting for the retracement of a secondary trend can be in fact the highest probability investment or trade. As you can see here on this Bitcoin chart, the secondary trends are more often than not the best entry points before the primary trend continues. And we won't forget these little minor movements that make up the day-to-day activities. They are, you guessed it, the minor trends. But do not forget, most trends come to an end, and you could be entering on the last secondary or minor trend of that primary trend. So it can be wise to avoid trading the direction of the trend when you deem the price to be too overstretched. Like all trading and investing strategies, trend following comes with its hurdles. But if this approach is for you, the key is to cut your losers short and let your winners win with stop losses and profit-taking techniques.